This breakout strategy was built for Forex, but crypto is a different beast, so let's test it. Before I do, make sure you hit that subscribe button if you value real testing over YouTube gurus. This is what the strategy promises. Bananas 31 USDT was actually one of the shorts. Here on the chart, EMA50 has rolled over, we've gone beneath it. Clear rejection candle at the EMA50, strong bearish close. The chandelier stop clearly above price, clearly defined outside volatility where the dashed line crosses the purple. No clear support until further down. So this is how I tested it. 15-minute chart, all 425 pairs in the database. Risk reward at 2 to 1 like he used in his video. This is the 2 to 1 results. All the trades it actually took in the backtester. Now let's see what the stats actually say. Backtest from November 21st to December 22nd. The default 2 to 1 risk reward ratio. 31.2% win rate, 331 trades taken. Kind of break even, it really didn't do anything. So I adjusted the risk reward. I tried 1 to 1, 0.7 to 1, 3 to 1, 4 to 1. 3 to 1 was the only one that actually improved, but barely. So almost above break even. For 293 trades, if all I received was $38, I would not be a happy bunny. The key takeaway for me is that this was designed for Forex and is probably a very good strategy for Forex, but crypto is very different. And then there's the elephant in the room. TNSR USDT was the most successful short trade they had on the 2 to 1. And as you can see, it was going into profit. The problem is, it remains in trade for the entire period of the backtest as it attempts to get down to that 2 to 1. And remember, this is a short. However, around that exact same time, PulseFlow called a bullish alert in TNSR USDT. Same token, around the same time, but going in the different direction. Wide stop 14.4 in an uptrend, a high volume tier coin. 23rd November at 15:45 UTC plus 7 my time frame. This is all the data you get in PulseFlow. Now let's go to the chart to show this. This was the PulseFlow long at my time. And if I zoom in and rewind, you will see a fair value gap with a break of structure. So I set my entry here and I set my stop loss down around -14. So here we have the Forex strategy calling a short that is in profit, and PulseFlow calling a trade that is a long at exactly the right time, which returned a 74% profit, a nearly 5 to 1 R&R. Let's let the short play out to the end of the backtest. Even at this point, you can see you're going back up to your entry multiple times. If I was in this trade, you'd be thinking, get out now. You'd have just gone into yet another loss. To save you from the pain, it never got to a 2 to 1 risk reward ratio. It was edging back down, but PulseFlow had started and finished its trade long time before, because PulseFlow works with market context, institutional money flow, liquidity, whereas this is using EMAs. So my final verdict is, this most likely isn't a bad Forex strategy. His backtest got 65% win rate. But it does not transfer cleanly to crypto. Crypto doesn't reward tight mechanical rules. It rewards market context, volatility awareness, and adaptive risk. So in essence, this is TA, not for us. And that's exactly why I test like this. So if there's another works anywhere strategy you want tested, drop it in the comments. We don't argue, we don't guess, we test. Please subscribe, like, and share, and I'll see you in the next one.